Hi, my name is Mark Mitchell. I've been an insurance advisor for 25 years. I'd like to share with you some fundamental insights about risk management, or what's commonly referred to as insurance. The world we live in is fraught with risk. Some risks have a greater probability of occurrence than others. For instance, consider an auto accident. In an auto accident, various types of insurance or risk policies might come into play, such as your auto insurance, property and casualty, health, or in the unfortunate event that a death occurs from the accident, life insurance. Let's consider something a little less gruesome, perhaps a downhill skiing accident that resulted in injuries. There, you might still have health insurance to pay for the injuries the individual sustained, but then there may also be an occurrence for disability insurance to come into play to help replace the income that might be lost during the recovery phase. There are many types of insurance arrangements to address these exposures. And if you think about it, on some level, everyone participates in some form of insurance. For example, if you're a beneficiary of Social Security, in effect, that's a government-structured plan to provide for some quality of life in the retirement phase of one's life. There are other financial products, such as life insurance, health insurance, homeowners, auto insurance, and the various types of retirement plans such as IRAs, all of which are designed to provide a degree of protection based on whatever the risk is. Insurance in a broader sense allows the shift of a potential burden to a party other than the beneficiary. This is an important concept because it allows the beneficiary to leverage small amounts of capital, the premium, to guarantee a much larger sum when needed. Insurance is a fundamental element of any sound financial plan. There's a big misconception that wealth, or the accumulation of wealth, eliminates the need for insurance. Nothing could be further from the truth. The fact is, and in my experience as an insurance producer, that insurance arrangements are often used to protect and to create wealth. Let's look at a few situations to better understand this concept. For example, a family has just suffered the untimely loss of a loved one, and that loved one happened to be the one who brought the salary in and provided the necessary income to make the payments on the family home. Unfortunately, there wasn't sufficient resources, the salary stopped, and now the family is faced with having a foreclosure on the home that they've owned for many years. Alternatively, think about a business that was started by an individual, and that individual had key relationships that resulted in sales that allowed the income to come in, the salaries of all the employees to be paid, retirement plans, all of these wonderful things to take place. But because that person is no longer here, those relationships are gone to the competition. In both of these instances, life insurance would have made a difference because it would have provided the necessary cash flow to ensure that everything stayed intact. Now, with what you have just seen, can you think of personal situations where insurance would make a difference? Personal financial planning at any level necessitates sound financial management. This requires a plan. You can start with the Life Financial Planning Pyramid. You can view the pyramid at the Life Foundation website at www.life-line.org. Any good financial plan consists of two aspects: protection and security, and accumulation. At the base or foundation of the pyramid is protection and security, which will include a variety of insurance products. The right products, no matter what happens, will guarantee that immediate and future financial needs can still be met. I have a client, or had a client, who was a stockbroker in one of the Twin Towers on September the 11th. He was an up-and-coming broker in this brokerage firm. Sadly, he was always too busy to implement the life insurance program that we had discussed. His attorney wanted him to have it, as did several members of his family, but he never had the time. On September the 11th, he lost his life. Worse than that, his pregnant wife had just completed law school, was looking for a position as she had just completed the bar, couldn't find anything in time to save the new home that they had just purchased. She lost it. She and the baby had to move in to live with parents. On a more personal note, when I was very young, my mother passed away prematurely. Leaving my father to fend for himself, to raise myself and my two younger siblings. Sadly, at the point that she realized that her illness was terminal, that she wouldn't recover, they attempted to apply for insurance. She was uninsurable. Had insurance been in place, it would have prevented my father from having to take on a second and third job, which gladly he did, but it would have made it a lot easier to raise the family, and we would have been able to see more of him. Had they had insurance, life would have been a lot easier. The risk of dying too soon, living too long, or becoming disabled is a reality that we all face. Failing to plan is planning to fail. Please be prudent and act now.